And how would you describe the situation now in broader terms?
Obviously the big short to medium term issue is the pandemic, and the pandemic does not seem now that we will be out of this until, say, midway through next year, when we have a vaccine that's been tested, has gone through phase 3, that has been distributed, and people have been vaccinated. Obviously, COVID-19 has accelerated digital transformation at a consumer level. 1/3 of US consumers are buying essentials and groceries online. We're educating our kids online. We're communicating online. We're having our financial services online. We're having our insurance online. So obviously that's one level. Media, as you know, the acceleration of digital transformation amongst the media has made it more and more difficult for newspapers and magazines, more and more difficult for free-to-air television, as the streamers like Netflix and Disney Plus grow and grow. So that's the media too. Online digital outdoor does well, but classical outdoor still suffers. And then lastly, and most importantly, enterprises that perhaps before COVID-19 were hesitant to transform because they were growing at, say, 2 or 3 or 4%. They cut their costs, they bought back stock, they grew their earnings by 5 to 10%. That was a good sort of modus operandi or status quo. But when COVID-19 hit, as you see with the earnings that are being reported in Q2, it's a bloodbath. Banks are down by 50%. They heavily provision their results. So the world is a very difficult place. There are going to be V-shaped recoveries: tech, healthcare, online shopping, in-home entertainment and gaming, obviously, are examples of that. More U-shaped recoveries in autos and packaged goods, although a packaged goods company like Procter & Gamble and Reckitt do extremely well. But there'll be U-shapes with sort of flatter U-shapes and shorter U-shapes, depending on the vertical. And then there will be L-shapes like travel and hospitality. And I don't think there will be any chair shapes, things that verticals that fall out completely, but it's going to be very difficult. So that's the way I see it. Now, from a geographical point of view, I still think that South America, that Asia Pacific, Middle East, and Africa present very significant opportunities. If I look at,
I have seen a correlation between the stock value and the performance in the stock exchange that seems very much in S4 performance, pretty much like the technology companies. Is that correct?
That's correct.
All
That's
right.
correct. Yeah, we correlate to Globant, for example.
Okay.
Globant and us, if you do a chart of us over the last 2 years, we exactly the same trajectory. We're not correlated. We do better than Accenture. Globant and us do better than Accenture. The holding companies, WPP, Dentsu, and Publicis, have halved. They're down 50%. IPG and Omnicom are down 20%, and we're up 200%. So, and Globant is up 200%. So you're right. We correlate more to Google and Facebook and Amazon and Accenture, although we're much smaller. But the closest correlation is interesting, as I'm talking to somebody from Buenos Aires. The closest correlation of our stock price is to Globant. It follows Globant almost exactly the same.
And what does this consolidation and merging brings as a benefit for your clients? I mean, your clients are CEO.
Well, it broadens. You take this afternoon. I mean, it gives us a much bigger presence with Amazon, and it gives us a much bigger opportunity to take Orca, which is a Seattle-based company, and show their services or leverage their services in not just the United States, but in Latin America, in Europe, and Asia. And although, we just announced the deal today, we've been working with Orca for the last couple of months, and we're getting a lot of traction with clients as they see what Orca can do with Mighty Hive and Media Monks on the Amazon platform.
And what is your conversation when you talk to CEOs or CMOs about these mergers? What do they ask you? What do they need? What is their mindset?
Well, if you take Digodat or you take Lens 10, it's data and analytics. Given Google's decision on third-party cookies over the next couple of years, and Apple's decision on third-party cookies, in relation to their hardware, it means that clients have to use the signals from Google and Facebook and Amazon, and Tencent, and Alibaba and TikTok more aggressively. And it means that their sources of first-party data are becoming more and more important. So the answer is when we expand in data and analytics, which we've done with Lens 10 and Digodat, and then before that, Convergence Works and Datalicious, or when we expand our platform relationship with Amazon or with Adobe or with whatever it happens to be, that makes us much more relevant because, as I've said to you before, we basically have to understand how Google, Facebook, Amazon, Tencent, Alibaba, TikTok, Apple, Microsoft, Adobe, Salesforce, Oracle, IBM, SAP, Twitter, Snap, Pinterest, Spotify, Netflix, LG, Samsung, how all these companies are operating, Snap, how all these companies are operating, and we agnostically advise the clients on how they should use the platforms, how they should use the hardware, and how they should use the software. So our responsibility is to understand these companies in as much detail and as carefully as we possibly can. So if TikTok becomes more important and Facebook becomes less important, or Google becomes less important and Alibaba and Tencent become more important, or whatever, that we're in a position to help them understand those platforms. So I think it's very simple. This is like what happened to the conglomerates about 30, 40 years ago. There was a discount in the stock market for the conglomerates. There's a discount on the holding companies, and the sum of the parts is greater than the whole. So the answer to your question is to break it up.